Hey everyone, welcome to the Weekly Review. This week, one of the more interesting things that came up on Twitter was this one. It was all over Twitter on Thursday and Friday that the US has added more than 500 billion to national debt since September 26th. 1, 2, 3, basically a month and almost a month, 3 weeks and a bit. And if you are wondering why the market is not dropping or correcting in any way, this is most likely the answer because huge liquidity injection and the market is basically not allowed to correct in any way. And if that is the case, we have to look at things from this perspective. And everything is about the US elections, November 5th. For EU time is basically November 6th. But market not being allowed to drop has different implications. One is markets are not allowed to drop. Second is oil is pummeled. Third is yields will go up. And with all of this in mind, basically we have the playbook. One is oil will go down, target being 60 in my opinion, or the 60 area, until the November elections. The news from last weekend was that Israel agreed to not strike against Iran's oil production capacity or nuclear arsenal before the US elections. And my guess is that they will definitely attack Israel energy infrastructure after the elections. It was only to not make oil spike before the US elections and reduce Kamala's chances. With this in mind, why I think they can definitely take it lower, and my target would be 60, and likely a buy after that, especially if Israel does attack Iran's energy infrastructure. If that would happen, is this spike here was only the threat. If it actually happens, I think the spike will be much, much bigger. Secondly is US yields. I had a small position on TLT. It got stopped out a couple on Thursday, I think. Anyway, irrelevant. The point I will make is US economic data will be sugar coated and it will not be bad in any way until the election. If that is the case, the reason why yields and the dollar are spiking is because economic data is too hot, meaning the Fed cannot cut, meaning long-term yields deserve a premium because if economic data is hot, it means inflation is coming back. So this is exactly what is happening here. Yields are saying inflation is coming back. Dollar is saying inflation is coming back. And look at DXY over the last couple of weeks. Call this down here. So again, let's also, I didn't put it on DXY, so let's put November 5th on DXY as well, like this. Dollar up until election, probably like 104, 105. Long-term yields up until election, probably like 4.6, between 4.5 and 4.6. And markets up, obviously, markets up. And if that is the case, then it becomes much simpler when you think about it in this paradigm. And I am short, as you probably know if you follow me on Twitter, meaning I bought puts. I am now reconsidering that if we get the opportunity to get out green, I think I will get out green and wait for 5900 to 600 to come after that. Because again, the market is just not being led to correct. I posted liquidity at the end of last quarter as well. And look what happened after that. Liquidity started going up almost immediately after the month. This was September 27th. And the next day, October 1st, liquidity was top October 1st, sorry. So after that, I started going up. And we are still hovering this near this level. At one point, this will stop. It will likely be at the election. And but until then, the playbook is easy. Not necessarily short, but wait for the dollar for oil to hit 60 and then probably long. Wait for DXY to hit like 104, 105, and then we short the dollar. Uh, and yields probably get a bigger TLT position near the end of the election cycle because we have a couple of economic prints and they will all be hot almost for sure. And we hit like 4.57 here on TLT. We go long TLT again, like 92 probably, something like this, at 92. And for the market, we just don't fight this because there's no point until we get to the election. I still think we do a correction, like it cannot go vertically up, and of course next week earnings are coming. And the following week we have even more earnings, but we have big ones this week like Tesla, UPS, IBM, Coke, 3M, a lot of important earnings. I talked about the importance of Texas Instruments in the other video of individual names of what semis will do. Uh, but the market will probably not be allowed to go down. So, playbook for next week is find an opportunity to get out of puts. Another thing that is working against puts is IV. Like I think yesterday was like plus 38.38. I think puts went down more because VIX dropped and IV dropped than because SPY went up. So this is also potentially working against us because if IV goes down, like if VIX goes to 15 or even lower, then this becomes problematic because we're not only losing value on the market going up, we're losing value because IV went down and we lost IV value from puts as well. So it's probably not the best idea to get into puts here at 20 and we need to get out and look for a better entry a bit later on. And was looking at Vivix as well. Kinda has this big setup here in which I think we still go up and stabilize in this range for a while. And maybe somewhere early next year or in December we do a bigger correction. Or it can just happen like this, which would be election. Let's put the election on this one as well. Yeah, lines up pretty well. So let's redraw. If let's say we have a blow up after the election, something like this, like this. But more likely we go up and then we do this until the end of the year. This is kind of the base scenario. So yeah, this is kind of the whole setup for this week. Expectation is still that we short-term correct because OPEX effect, because we're way too oversold, but correction for ants. Let's assume this is 1.9%. It's nothing. If we go to 565, it's 3.26. Again, it's nothing. This is there's actually no point in being short at the moment, and I realized my mistake. Going to this is 476%. So this will be a kind of a regular correction on the number of circumstances that will still allow us to be bullish the rest of the year, but it's unlikely to happen. And also looked at the profile for next week. Very, very loaded on SPX 5900 calls for next week. And if that is to happen, or this is it's 588. So this is the bearish scenario, but we can also have the bullish scenario with some continuation up. And it would be something like this. then it becomes even more. This would be 2.4 if we go all the way there. But could definitely push to 5900 before we go down, and that's 588 on SPY. So yeah, I think I've been looking at this wrong from a short-term put perspective. It was always intended to be just a position to get in, take profit around here. But now I'm even questioning if we go this low because everything that's happening seems to be done to uh, get Kamala elected. So yeah, that's it for this week. Have a good one. Bye bye.